It's February 24th. JLD here, and welcome to MSTR Today and the Treasury Titans. Nothing in this video is financial advice, but Michael Saylor wants us to be one thing: be indestructible. He's indestructible. We know that the strategy, war chest, and balance sheet is indestructible, but we need our emotions to be indestructible because nobody will tell you these are not tough times. That's a bull right now. If you're a bull, these are tough times. If you are leaning bullish, these are tough times. We have been in a downward market for months and months and months. The grind, the grinds, it just continues to wear on everybody and everything. But here I am. I'm showing up for you every single day, obviously, except for Sunday when I was at the beach, but every single day. And I'm just sharing what's going on. And together we can get through this. Together we will get through this. I so look forward to looking back at these days and being like, man, those are some tough days. And I'm going to say, guess what? And there's some tough days ahead of us too. I don't know when that's going to happen, but just because it's great right now doesn't mean that it's going to be great forever, because the pendulum will continue to swing both ways. But Michael Saylor is indestructible. If you listened to any of that interview with Natalie on Coin Stories, it's fantastic. We'll hear some more of that one today because it's just a great interview. But Michael Saylor's indestructible. He's unflappable. Fong Lee, the strategy team, all of them. And I hope you are too. And Chris says, amateurs see dips as danger. Professionals see dips as discounts. And I'll tell you, I bought yesterday. I bought today. I am continuing to dollar cost average into this market, and I will continue to do so. And I hope many of you are joining me. Jeff says, digital credit is dramatically more observable than traditional credit. That's interesting. And of course, Jeff's talking about the blue owl, which is not observable, and how stretch is observable every 15 seconds. It's updated every 15 seconds. It's observable, it's tradable, all those things. And this gets into even more details. Since Strategy made preferred shares, which is digital credit, its primary capital raising tool, many people still debate whether they are truly better than convertible bonds. The truth is that both have trade-offs. However, on net, preferred shares are the stronger instrument because they offer more attractive properties than convertibles for the following reasons. And let's go through them. 1, duration risk. Perpetual preferred shares never mature, so the company avoids repayment deadlines that come with convertible bonds. 2, maturity risk. Perpetual preferred shares carry no maturity risk since there is no point in time when the capital must be returned, unlike convertible bonds. 3, refinancing risk. Perpetual preferred shares eliminate refinancing risk since they don't expire, unlike convertible bonds, which force the company to refinance or repay the debt. 4, flexibility. Perpetual preferred shares offer more flexibility since dividend payments can be paused during stressful periods, unlike convertible bonds where interest is mandatory. Publicly traded. Perpetual preferred shares are publicly traded, giving the company access to a wider investor base with better liquidity, unlike typical convertible bonds. Qualify as ROC. And by the way, this is so underrated. Perpetual preferred shares qualify as ROC, return of capital, enabling better capital efficiency, unlike convertible bonds that do not. So let's go through these quickly. Convertible bonds. Well, actually, let's start with duration. Convertible bonds are fixed, preferred, infinite. Obviously, infinite is better. Maturity risk. Yes for convertible, no for preferred. Refinancing. Yes for convertible, no for preferred. Flexibility. Low for convertible, high for preferred. Interest obligation. Mandatory for convertible, discretionary for preferred. Now, of course, Michael Saylor and Fong Lee have said they have no intention of ever not paying their interest obligations. But of course, having that option gives them what? Optionality. Publicly traded, no for convertible bonds, yes for preferred shares. Qualify as ROC, return of capital, no for convertible bonds, yes for preferred shares. Let's keep that rolling. Powerful stuff. Okay, let's move on over to 100% Strategy, who says, why is strategy constantly talked about by fans, haters, and skeptics? Why do Fong and Saylor keep getting involved in every major interview, conference, and news outlet? Because strategy is the most interesting thing happening to capital markets right now. It's not even close. It's not even close. And look down here, open interest market cap, 73.7% for MSTR. The next lowest is Tesla's 16%, and then it just goes down to 8, all the way down to 2.8 for Apple. That's not interesting. What's interesting is MSTR. Chris says, In 2018, Tesla was the most hated stock on Wall Street. Everyone thought it was going bankrupt and that Elon Musk was a fraud. Tesla is now a $1 trillion company. In 2026, Strategy is one of the most hated stocks on Wall Street. Everyone thinks it's going to get liquidated and that Michael Saylor is a fraud. MSTR will become a $1 trillion company. And Mike says Bitcoin is software, but it is not a software company. This is a key distinction that the market is currently getting wrong. The longer Bitcoin trades with IGV, the better for long-term Bitcoin bulls, as the decoupling will be violent and explosive. Long Bitcoin, short generic software. Powerful stuff. It's going to get better, my friends. I don't know when, but it will get better. I can remember back when Bitcoin was 15,000, which was not too long ago. Everybody was predicting it was going to zero. And then we were at 126,000 in what felt like a blink of the eye. I mean, it was over a year later, of course, but it was pretty explosive. All right, we have that great interview from Michael Saylor coming up as soon as we get back from thanking our sponsors. When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you in your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides, even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's INCOGNI.com/MSTR.
Okay, so is $1 billion enough? Is 10 billion enough? Is 50 billion enough? Right? At what point do you have enough fundamental insight on this? Well, I would say you had enough to know that Amazon was unstoppable a decade before the world agreed. You had enough insight to know that Apple was unstoppable 7 years before, probably 10 years, actually in 2009, 11 years before the world agreed, you knew it was unstoppable. You have enough information to know that Bitcoin is unstoppable right now. The world's going to eventually come to a consensus, and it'll be the Warren Buffetts and the Carl Icahns of the world that will be what creates that consensus. They won't be first. They'll be last. They won't make a huge amount of money. They'll double or triple their money, right? And they will enter, and the PD goes from 10 to 30. They triple their money in a 12-month time period. And if you're able to think for yourself, and if you're able to weather volatility, you can 10x, 20x, 30x on your investment. But there really is no example of a successful technology investment where you didn't have to weather the 45% drawdown and go through that valley of despair, right? Ours is currently taking 137 days so far. Mm-hmm. But it might take 2 years, it might take 3 years, it might take 4 years. If it took 7 years, congratulations. It's just like Apple Computer, the biggest success story of the decade.
What do you say to those out there who feel disappointed by the bull market that we didn't go higher than 126,000? And what is your reasoning for why we didn't get to maybe some of those price predictions that a lot of people wanted?
I think the market is evolving. The entire ecosystem is evolving and seasoning. And if you look at all the dynamics, the derivatives market is migrating from offshore to onshore, and it is maturing. And so as derivatives in the U.S. regulated markets grow, that strips some of the volatility off of Bitcoin and some of the upside off of it. It damps the upsides. It also damps the downside. Instead of an 80% drawdown and an 80 vol, you get a 40 or 50% drawdown and a 50 vol. So you're seeing volatility damped on the upside and the downside by the seasoning of the markets. But you also have a situation where the banking establishment is embracing Bitcoin at a progressive but a slower rate than people with short attention spans would like. It'll take the banks 4 years, 5 years, 6 years before they embrace an entirely new asset class. People would like for Bitcoin to be recognized in 4 months. But if the banks take 4 years before they start to bank it, extend credit on it, acknowledge it, and handle it, trade it, custody it, etc., then that means that what you have at the top of the market is $2 trillion worth of Bitcoin, probably 1.8 trillion held by retail investors or offshore investors, and they cannot access the traditional banking system. They're in the shadow banking system. So if you had $1.8 trillion or more than $1 trillion worth of capital and no one would give you a loan on it, then how do you monetize it, right? If I posted $10 million of Apple stock with JP Morgan or Morgan Stanley, I could take a $5 million loan at SOFR plus 50 basis points and I could spend it. But you can't even post $10 million worth of Bitcoin with JP Morgan or Morgan Stanley right now. Therefore, you can't take a loan. Therefore, you have to go to a shadow banking system. You have to go offshore. So how would you actually monetize it? You either have to sell it, right? The safe way is to sell it, but that damps the upside. What else can you do? You can, by the way, you can get loans, a very small amount of loans from a few crypto exchanges where they don't rehypothecate your Bitcoin, but the sum of that capital is a few $1 billion probably. So maybe there's a few $1 billion of Bitcoin credit that you can tap at SOFR plus 500 basis points or SOFR plus 400 basis points. Okay, this not SOFR plus 40, SOFR plus 400. So it's 10 times as expensive to actually draw down capital. And how much capital? 1/1000th of the amount of capital available for securities portfolios. So there's 1% or less of the capital available through the conventional banking system. It's expensive. Okay. What else can you do? Well, I guess you can convert the Bitcoin to IBIT. And just in the past 6 months, some banks are starting to extend credit against IBIT. Mm-hmm. And it's a bit more expansive than Bitcoin credit. It's a bit cheaper, but we're only in the first 12 months. And it's still expensive, and still it's like limited in its loan to value. Now, there's a third place you can get credit. And the third place is you go to a crypto exchange or an OTC exchange, and they'll oftentimes give you a loan at 4% or 3% or 5% or 2%. I've had people offer me Bitcoin-backed credit at 1%, or 0%? What's
Wow.
the catch, Natalie?
Right. That's the question.
There's always the catch is they want me to transfer the Bitcoin to them so they can rehypothecate it.
Right.
So if you have $10 million, you either cannot get a loan from a legitimate bank, or you can get a small loan at a 10% interest rate, or you can get a 3 or 4% loan, but then it gets rehypothecated. So your $10 million of Bitcoin gets sold once, gets sold twice, gets sold 3 times. You might actually create $30 or $40 million worth of selling, because the Bitcoin that you posted is that you transferred to the shadow bank or the crypto exchange, rehypothecated it 3 times. What's the second best? There is no second best.